Hey, this is Danielle. Welcome to the free video. So tonight I'm going to be talking about Etsy, one of my favorite e-commerce stocks and one of the best COVID e-commerce stocks as well. So Etsy's had just a fantastic rally off of the lows all the way down to, what was it? We're down to about $30 per share, okay? And now we're currently trading at $129. Now, somebody might say, well, you're insane. Why would we look at this? Well, I was on CNBC a couple weeks ago, and that's exactly what I was asked about Overstock. And look at this. I was on CNBC, let's see, it was right here. When it was right about 47 bucks, this thing is trading at $118 a share now. Why? Because it has high short interest, and because we're in a situation right now where consumer behavior is drastically changing and people are buying things online more than ever. Now, Etsy doesn't have as much short interest as it used to have. On Finviz, I'm getting a 5.81% number. I don't think that's accurate personally. But what it does have is it has the backing of the pandemic and it has some technical setups. So, looking at this here, number one, you have a little nice little cup and handle pattern. You also have a 195-minute squeeze. You have positive volume. And you have a nice big round number target at $150. Now, whenever I have a fib extension overlapping with a big round number, overlapping with a major monthly expiration, to me, that just really stands out. So you can see, right now trading at $129. $17 move is expected between now and then, but it has a squeeze. So normally you're going to move greater than the expected move with that squeeze. And then you also have quite a bit of high open interest and volume right around this 150 strike. So I think everything is aligning pretty well for a butterfly. So I really like to do these low priced butterflies. I think they're great for growing small accounts. Especially when you do it just right out of the money, you can get a really good price on it. So let's look at two different options. Number one, this is just slightly out of the money, trading at $129. Your long strike is $130. That's going for a debit of $4.19. So that's a pretty cheap trade. Now, if you look at the risk reward, you're risking $400 to make about $1,500, all right? Now let's tighten it a little bit more. So let's do it $15 wide instead of $20. Now your risk reward is even better. You're risking $222 to make $12.74. Now I will note that with butterflies, the likelihood of you getting the exact max profit, I would not bank on that whatsoever. Normally I try to get at least a double, sometimes triple, and if I can get more than that, then even better, but my target is usually about double on the credit. On the debit, not credit. Anyways, that is how I trade. Also, I wanted to tell everyone a special thank you for joining me on the webinar last week. We just had a great showing. I have so many emails right now. I'm working my best to get through all of them. If you missed it and you want to learn more, you can go to simplertrading.com/profits and you can learn all about my mastery program. The trade that I explained is basically the type of trading that I do all the time, low risk, high reward, directional options trades. And if you want to learn more about all that, you can go to this website and learn about my mastery program where I do a once a month live trading with interactive Q&A, send out daily alerts. Sometimes they're market updates, sometimes they're trades. I give you my weekly watch list and you have access to my full trade spreadsheet along with my 5-star trader newsletter. So if you're interested, let me know. Beyond that, I will see you in the next one.